Money on my mind, 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 money on my mind. So money is all I think of. Money on my mind, money on my mind, money on my mind, money on my mind.
Alrighty. Money is always on my mind. Always on my mind. I mean, why wouldn't it be, me being a financial coach or a planner? Or I'm not an advisor, you guys. I don't give no advice. But anyway, you guys, you are listening to the #1 finance literary show of all of the Bay Area. Yeah, I'm claiming it, even though I don't have the stats to prove it. Financial State of Minds, where I help you get to that bag, manage that bag, and grow that bag as best as possible through educating you guys on financial literacy, management, planning, and business, and everything related to the mighty old American dollar. You're listening to your host, Darrin Harvey, aka Blickety Blindie himself, the money man, Mr. Finance, whatever you want to call me, the credit guru. I have so many names, it's getting ridiculous right now, but just call me Darrin Harvey. We are tuned into another episode of Financial State of Minds. I appreciate you tuning in. As always, I appreciate you. Yes, you, whether you're a male, female, young, old, rich, poor, black, white, Mexican, whatever. I appreciate you tuning in and choosing to use your valuable ear energy to listen to your boy spit that financial game like I always do. I've already done lost count. I think this is episode 25. If not, just cut it out. I'll just throw some random numbers out there. It's probably like 25, 26, 27, 24 maybe, 28. It's somewhere up there. I'm losing count always. I need to ask this stuff before we get recording, but it doesn't matter. We're in the mid-20s, like some of my best times in my life was. And again, I just appreciate everybody who is listening live on this broadcast in Oakland, California. It is a cold, breezy day. Thank goodness it is not raining at the moment, but that is probably going to change. But I hope everybody's driving safe. I hope everybody is enjoying their Monday morning or their Monday evening or whatever time they're listening to it on KGPC969.org, or if you're tuned into KGPC 96.9 FM right now. Just want to say thank you. Even if you're not listening to it in California, I just appreciate it. So what is today's topic going to be? Today's topic is going to be something that I haven't really talked too much about yet on the show. I've touched about it here and there, but it's something that I'm really, really kind of passionate about learning constantly, even though I'm not licensed to really do it. And that's taxes. We're going to talk about taxes, you guys. We're just going to talk about taxes in general, nothing too specific, no specific tax advice or strategies in this episode. I'm just going to get right into it. But before, I want to make a very clear disclaimer. I need to do this more often on all my episodes, but you guys, I'm a financial coach. I'm a financial planner. Mainly, I'm a coach. I educate. This is not direct advice. This is just for education purposes. This is for you guys to understand how finances work. And in this example, understand how taxes work. Please, no matter what I say in any of my episodes, but especially in this episode, do your due diligence to get it double checked by a CPA or your tax specialist of choice. It can be H&R Block, it can be TurboTax, it can be your local accountant or CPA. Run it by them. Do not take what I'm going to talk about or anything I talk about related to taxes, the law on the land, and don't take it and just apply it without the guidance of a licensed professional, which I am not. I want to make that clear. But that doesn't mean that this information is invalid or useless. A lot of this information comes from research that I do, hearing and listening to CPAs. And then I have a couple CPAs that I'm fortunate enough to be connected to. And I just double check with them and say, hey, is this information accurate? And they give the thumbs up. And that's what gives me the confidence to disclose it. But okay, taxes. Good old taxes. People are thinking about filing their taxes right now. People have filed their taxes. People are in the process of tax preparation. So I felt it was necessary to talk about taxes. So I just want to give a good old overview about taxes. So What is taxes and what is it for? Do you really need to hear me explain that? But for the one person who really wants to hear me explain it, we all know what it's for. Taxes is essentially the number one way the government receives money. Income taxes, I believe, make up 40% around there. It's just shy under half of all income the government receives is income taxes. Whether that's federal income taxes, state income taxes, doesn't matter. That all falls under there, 40%. So this is how the government gets paid. It's that simple. That's why they care about taxes, and that's why you cannot avoid paying some level of taxes, or let me refrain from saying that. That's why you will always have to owe taxes unless you come up with excuses or what we call deductions. That is why we have taxes. The government needs money. We all know that. No one likes paying taxes. It doesn't matter what spectrum of political you are in. It doesn't matter what level of income you make. It doesn't matter how rich or how poor you are. Never met a person who is just like, oh yeah, I love paying taxes and I'm ready to pay more. It's just something we all have to do, and that's the cost. We can have debates about where the tax money is going to. We can have debates about how it's being used. That's a debate, and that's something I'm not interested in discussing. Again, I'm just trying to educate you guys on how it all works. So one thing I'm passionate about explaining is, why is the tax system set up the way it is? Or to clarify, why is the tax system set up the way it is in this country? I say this to say, understand why the tax system is the way it is. And once you understand it, it actually makes sense. And I actually don't really disagree with the way it's set up. As I was telling my producer earlier, don't hate the player and don't hate the game. Just understand them both and take advantage of the game. And that's what I am passionate about educating. So anyways, why is it set up this way? It's really simple. Imagine this. You are a mayor in a city. Pick a city what you want. Imaginary city. Your goal is to make sure people are in the city, stay in the city, are happy to stay in the city, are happy to bring people in the city, are happy to work in the city, and therefore pay their taxes to you as happily as possible. So you get paid as a mayor, because the mayor gets paid from our tax dollars. So how do we make that happen? Or more importantly, how do we encourage the everyday folk to come to a city, to your city that you're the mayor of? So let's put a name to this city. Let's just say the city's name is Woodland. I don't know why I came up with it, but it's called Woodland now. So you're the mayor of Woodland, and you want people to stay, work, and live in Woodland. And you have the power to write the tax laws, just for this artificial sake. You're going to write the tax laws in a way that encourages people to move here, work here, and stay here. Okay. What laws do we know kind of favor that? Well, owning property, whether that's a home, apartment, commercial real estate, like business centers and stuff like that, or whatnot, that's a way to get people here. And obviously, a city needs jobs. So businesses themselves that employ people, the city needs that. You're going to want that to happen in your city. And you're going to need that to happen in your city for your city to grow and prosper and the likes. So you in the city can make more money through income taxes. How are you going to write your laws? Well, you're going to write your laws so that people are incentivized to do just that. Open up businesses here. Buy or move into the city, meaning buy property or buy houses, and move into your city of Woodland. Open up businesses in the city of Woodland. So maybe you're going to give tax benefits if you open up a business here. Maybe you're going to give tax benefits if you have a certain amount of employees that work in this city. Now, because we all know there are more workers than there are businesses, we want to give the incentives to the business owner, because they're the one, there's less of them. There's just frankly not only less business owners and less people who are willing to open up businesses, there's even lesser of them who are successful and continue to do it. Same thing with houses. People need to live in your city so they can go to work and back and forth. So the mayor should give incentives to landlords, property managers, property owners, and investors of any type of real estate. So again, they're going to give them the tax breaks. They can't give everybody the tax breaks. They're going to give the people the tax breaks who provide the income or support the income coming into the city. So the everyday worker who works at Applebee's, who works at Amazon, who works at McDonald's, who works at Salesforce, who works at Google, who works at Facebook, who works at, you get the point, they're not going to get as many or nowhere near as many tax benefits because they didn't do the heavy lifting or they didn't bring the business there. They're just helping the business operate. It's the same thing with houses. If you move into a house that you're renting, or you move into someone else's house that you're renting or apartment, you didn't build out the house. You had nothing to do with that. At this point, you're just a resident and you're continuing the process of that house being operated. You're supporting that by paying, and it's a service being traded. If you're in a home, you pay rent, so all the lights stay on. It's the landlord's job to make sure all the lights stay on and everything's in a good working order, and you have a safe, reliable spot to live. It's the same thing in business. You didn't create the business, so no, you're not entitled to the most pay because you didn't create the business and you didn't do all the hard work to initially create and keep the business fully operated. You know, everyone knows this. If you leave the home, if you leave the home that you're running in, whether it's through eviction or you just find something better or hopefully become a homeowner, that home's still going to stand and there's going to be another renter there probably within 90 days. Same thing with a business. If you quit working at McDonald's, if you quit working at Applebee's, if you quit working at Amazon, they're just going to replace you with somebody else. You're what they call, unfortunately, easily replaceable. So the tax law incentivizes people to do things that aren't so easy or there's less people willing to do it. That is the concept I need everybody to understand and embrace when it comes to taxes. There's a myth out there that the rich do not pay their fair share in taxes. They hear stories about Donald Trump. They hear stories about Warren Buffett. They hear stories about Mark Zuckerberg. They hear stories about Jeff Bezos. They hear stories about Elon Musk, how they're making billions of dollars, or their companies are making billions of dollars, and they are literally not paying hardly anything in taxes. I think Elon Musk's effective tax rate is like 3.6% of his total net worth or income or something like that 1 year. Mark Zuckerberg infamously paid himself $1 salary 1 year. I think he still does that. So a lot of people get upset when they hear this and they feel that the rich do not pay their fair share of taxes. Now, you can argue that is true for the rich, the 0.001% of the rich, the absolute richest of the rich. Yes, a lot of them find very creative but legal ways to avoid taxes. But the truth is, the wealthy is actually the reason why all these services are going on. Social Security, SSDI, all these operations, stuff like that. It's the wealthy, you guys. Here's a statistic for you guys. The bottom 50% of taxpayers only pay 3.2%, or basically 3% of all income taxes collected by the federal government. It's barely 3% of the whole makeup. The top 1% of income earners in America pay nearly 43% of all taxes received by the federal government. Yes, the top 1% pays for nearly 43% of all income received by the federal government. That's just the federal government. We're not even talking about the states, where California is outrageous and New York is also outrageous in taxing the wealthy. I know a lot of you guys have resentment towards the wealthy, but the truth is they pay more taxes than you. Not only in dollar amount, but proportion of their income. They, generally speaking, pay more in taxes. Even if they don't necessarily have a tax return they have to pay for, they still pay more in taxes. So understand that. Now, how do the wealthy take advantage of our tax system? Well, I kind of laid it out in the beginning about being property owners, being business owners. Basically, really the main difference between a wealthy and the everyday person is the wealthy has more assets. They have more assets, and they usually have assets in several different ways compared to an everyday person, especially in the Bay Area, where they're not even a homeowner at this point. But even if they are a homeowner, that's their only major asset that doesn't really depreciate, is the home. You have your car, but that tends to depreciate. And the everyday person at this point probably has a 401k or some type of retirement vehicle for their retirement funds. Wealthy people got more than that. Wealthy people got stock portfolios. Wealthy people receive dividends from those stocks. Wealthy people own property, usually multiple properties. Wealthy people own businesses. Wealthy people own stocks in their own businesses. And they find very creative ways to pay themselves to avoid taxes. That's really the only main difference between the wealthy people and the everyday person. And what's funny is it's pretty equal. So if you take like the average household of an everyday person or a wealthy person, it's the same amount of people. It's just the knowledge. It's what I always preach about in my show, you guys. It's the knowledge and the mindset of what you do for tax planning. Once you understand that, then you have a decision to make. You understand it. Do you want to take advantage of our tax system in America, or do you want to not take advantage of it? It doesn't matter which one you pick to me, but I'm letting you know which one I pick, and that's to take advantage of it to the best of my ability. That's like tax secret number one, or overall, just in case you guys want to call these secrets or whatnot that they don't want you to know or something silly like that. Tax secret number two that the wealthy don't want you to know or something silly like that. Owning a business is the number one way to open yourself up to tax advantages or tax write-offs, tax deductions, and tax credits, to be specific. I've said it so many times on my show, and I'm sure most of you guys who are listening understand this too, that when you own a business, you open yourself up to being able to write off nearly anything. And when I mean nearly anything, I mean nearly anything. As long as it has some tie to your business or has some purpose with your business, you can write it off. When you open up a business and it's your at-home business, now you can write off your mortgage or your rent or part of it as a business expense. You can move your car over to your business, and now you can write that off. You can write off the mileage. You can write off the internet now. You can write off your cell phone bill. Here's a fun fact, you guys. You can even write off the interest on your credit card for your business if it's a business credit card or a business credit card usage. I can literally talk for 30 minutes about everything you can write off in business and all the different ways you can write off in business, but that's kind of beside the point of this episode. The point is that owning a business opens you up to being able to write off effectively anything. There are some exceptions, but pretty much anything. I have no problem telling you guys I write off about over 90% of my expenses because I can tie everything to business, because it really is. Like me going out to eat, I go out to eat a lot with clients, or I go out to eat a lot with people, and I talk about my business. It's a write-off. That meal is a write-off. I travel here to talk radio. Well, the Uber ride that I take here or the gas money I pay my driver, that's a write-off because that's transportation here, and I'm using this radio show as advertising for my business. I can keep going and going. At some point, I'm going to have an accounting episode, but the point is again, I can't stress this enough. You want to open up a business, if you're trying to take advantage of tax write-offs. If you do not do that, you really do not have much room to maneuver when you are trying to take advantage of tax deductions or tax credits when you're just a W-2 employer. Even being a 1099 person who drives for DoorDash and Lyft, you have more opportunities to write stuff off than the person who's W-2. W-2 person, that's your only salary, you really can't write off nothing. Being a homeowner opens you up to a few more tax write-offs. Property taxes is one of them. Home depreciation. I know, crazy. Homes can depreciate, especially in the Bay Area. What? Yes. Tax-wise, they can. And that's something I can go in depth maybe later. But yes, your home can be a way to leverage taxes, to avoid taxes legally. But really, when you turn your home into a business, aka rental property, or aka just using your home as your office location, then you open your home up to the most potential for write-offs. That is another quote unquote secret when it comes to avoiding taxes. Another concept which kind of extends out to owning a business is owning stock. So this is something that I think most people don't understand about stocks. What the super rich do, again, what the owner of Amazon, Facebook, Tesla, and Twitter now, Donald Trump with Trump Hotels and whatever he does, running around doing now, all these owners own corporations. Because they own corporations, they own stock in their own corporation. Whether it's private or usually public, they own stock in it. Once it's public, then you can sell that stock to, well, the everyday investor. The reason why Mark Zuckerberg can pay himself $1 and still be stupidly rich is because he's selling off his stocks. So, okay, Darrin, why would Mark Zuckerberg sell off his stocks of Facebook instead of just paying himself $1 million salary or whatever he wants to pay himself? It's because income tax, you guys, especially for someone of his wealth, is way higher than what income tax would be for selling stock. Selling stock can actually be nothing or as high as 25% tax when you decide to sell a stock and take that pay. This is why you see so many of these wealthy people on paper don't income nothing, because they're not. They're selling their stocks and that's how they're making their cash. Fun fact, most wealthy people don't like using cash. Most wealthy people like using borrowed money, whether it's loans, credit, whether it's equity. They don't like using pure cash. They like using what I just mentioned. So, and I educate people on this because a lot of us who don't own assets, they just don't know. I'll give you guys an example. When and I've talked about this many times, when I pulled out a refinance cash pullout, $150,000 to help take care of my dad, that wasn't taxed. They gave me a check for $150,000, put it into my Bank of America account. I wasn't taxed. There was no tax on that at all because that's technically under a loan. I write off the interest of the loan. As a homeowner, I can do that. And as a business owner, I can also do that. And then literally my tenants in my home continue to pay down the loan. None of that's taxed. I didn't get taxed at all. If you, listener, went to work at Google and made $150K, you're going to lose about almost a third of that money. But I done pulled out $150K from my home that I inherited and it's not taxed. So that's an example of, and wealthy people do this all the time. If you decide to donate something, that is a tax write-off, generally speaking, under charity and stuff like that. Well, that's why you see all these sports players have their own charity organization, because they can donate to themselves and avoid the taxes. I can keep going and going, but there is so many different ways you can avoid taxes. The mindset I hope to accomplish by this episode is to let you guys know that it's all just mindset. It's all just knowledge, and you have to apply it. And I just want to get you guys to understand that this is our system. You can't change it. You can be angry about it all you want, but at the end of the day, this is how things work. And this is not something that only wealthy people have access to. Every single trick that I've named that Mark Zuckerberg has done, that Elon Musk has done, you guys all have the power of doing it just by opening a business and by choosing the type of business that you choose to do. Me being a consultant, I can effectively write off dang near anything. If I choose to form my business and register it in a certain way, then I actually would have even more tax benefits or tax advantages. And all of this is 100% legal. I want to make that clear. Everything is legal. This is all in the tax code. Your accountant can pull it up. They can point to it. You can Google it. It's all there. This is not illegal stuff. What's illegal is not paying the taxes that you are owed. What is illegal is not reporting accurately the amount of income you made. What is illegal is you being a barber and you made $50K, but you only told the government you made $20K, and that's what you report. That is what is illegal. And yes, there are penalties if you do that and get caught. That's why they always tell you guys, hey, keep all your receipts and make sure your paperwork is organized. because if you get audited by the IRS, which is possible, I do have a friend who didn't make a lot of money who got audited. Like, he literally did not make 6 figures in profit. He got audited. And because his tax person did something wrong, he had to pay a 5-figure tax bill that he did not have because he trusted a CPA that didn't know what he was doing, and it screwed him over. This is why you don't have to know everything about taxes, but I want people to start learning either through me, either through talking with their CPA, either through watching YouTube videos like I initially did, however they want to do. Start learning about taxes, because just because you trust a CPA, it's just like anything else. It's like a cook. It's like the police. It's like the customer service person you're talking to. Just because they have that license, or a lawyer or a doctor, just because they have that license doesn't necessarily mean they know everything or they're even the best at doing the job. It just means that they did what they had to do to get the license. That's pretty much it for this episode. I just want to, again, give some general overview on taxes, why it's important, why it's powerful, and how you can take advantage of all of this information. Open up a business, go buy yourself a home, make sure you're throwing money into a retirement account like a 401k or a Roth IRA. There's so many ways that the government lays out in plain sight that you can avoid taxes. So instead of you earning 100k and you have to pay a tax bill overall of 40k, you can earn 100k and literally the government gives you money back, or you don't have to owe anything. It's possible. Shout out to my best friend. He made, I won't say exactly how much he made. I'll give a ballpark. It was over 200k. Sorry, over 300k. He made over 300k, and he doesn't have to pay taxes this year. And that's just because he did the proper tax planning. He got someone like me to tell him some things to do, and he found a good CPA. And yeah, over 300k, he didn't pay taxes. He didn't owe anything. That's it. I'm going to end that episode. It's been your boy, Blickety Blindy of Financial State of Minds, the show where I help you get to that bag, manage that bag, and grow that bag as best as possible through financial literacy, teaching you how to plan your finances, teaching you how to account for your finances, how to manage your kind of finances, and just talking anything about money, which includes good old taxes. If you guys want me to talk more specifically about taxes, like how tax write-offs work, what's the difference between tax write-offs or tax credits, please DM me at Financial State of Minds on Instagram. I really appreciate all feedback. Thank you guys for listening as always. And I can keep this kind of dissecting taxes. It's such a broad thing that gets very detailed. One of these days, I want to actually bring in a CPA so we can talk real good details, because taxes, like you guys know, changes every single year. I'm just someone who studies or gets fascinated about federal taxes. We're not even going to get into state taxes and how California is absurd compared to every other state. Totally different conversation. That's why secret number 3 that wealthy people do before I leave: move out of California. You'll save a lot of money on your income. That's it, you guys. I'm out of here. Peace, kings and queens.
Money on my mind, money